In this video, traders, we're going to look at the question how to handle new daily highs or lows in the index futures. Stay tuned. Hey traders, a very warm welcome to you. Thank you for joining me. If you are subscribed to the channel, I appreciate your support, likes, shares, comments, etc. And definitely appreciating this message from Sean. Appreciate you taking the time to write this, Sean. You say, I was hoping to do a video on how to handle new daily highs, intraday or lows. I tend to avoid playing them because it seems a lot of time in the futures when price gets to a new daily high or low, it will do a false break of a few ticks, should I say, before retracing a lot. Other times it will thrash through without hesitation. I've tried looking at previous days' resistance with no luck. Any suggestions? I trade index futures NQYM, so NASDAQ and Dow. So thanks for that, Sean. Really good question. That's a great question. Okay, so we're going to address that because it's right on my street as well, intraday trading of the futures markets. Right. So, daily highs and lows, super good levels, but like Sean said there, they can be confusing, right? Because one of two things are going to happen at high or low. And really, it's either going to break through or it's going to retrace back. And very often we get these retracements, and then, like Sean says, very often we get a breakthrough. So how do we kind of define when's going to do what? Well, we don't know, but one thing that helps us out with intraday trading that swing traders don't have is the time of day. So we've got, let's imagine our day here. We've got the opening session, we've got a little bit of chop, then we've got lunch, then we've got a little bit of stuff, and then we've got the close. So perhaps that's the first hour, and then we've got a couple of hours, then we've got lunch here, then we've got another couple of hours, and we've got like the hour close. And I'm just being broad with this. I think I've done a little bit more detailed video if you want to kind of check that out as part of this video. But the important thing is that when we're looking then at intraday highs or lows, the time of day is so important to us. Because if we have an intraday high kind of here and then we retest it within the first hour, then we probably quite likely to rip through one of those highs or lows, and it's less likely to hold. Now, that's not always the case. It does obviously depend on the broad strategy in the day before and what's happened the day before. But, you know, we have these expansions at the open. We have a lot more kind of price discovery at the open than we do at, say, lunchtime. So at lunchtime, you would be looking to fade the highs and lows because generally, again, this is generally speaking, we don't get breakouts so much and so aggressively during lunch, whereas we do at the open. Sometimes we've got those big opening drives. And so, yeah, and look at the closing hour, for example, as well. Closing hour, you wouldn't probably want to be fading highs or lows then because there's a lot of orders coming in to get done before the closing bell. So the beauty of intraday trading is that we can guide ourselves. And one of the rules that I have understood, there are certain exceptions, but very rare, is, you know, I'm not going to be looking for breakout trades during the lunchtime period, because most of the time, if you go back and look at your chart, you'll probably confirm this, is that we have highs put in. We have those pushes, we have kind of little failed peaks that take out the high and then reverse during that lunchtime session. And so you can start to then go, well, I don't quite know how it will perform. I don't quite know what's going on, but I can use a time of day to guide me. So, you know, roughly we can go, yeah, we can look for breakouts. Yes, we can look for breakouts. No, we don't. And then depending on the type of day for those two sections. That's one thing to kind of check out, integrate your time of day. The second thing is to look what the market's done already and how far it's already come. You know, if you've got your ATR on the day, so let's say your ATR, just for argument's sake, is 200 points. It's about 135 last time I looked on the Dow, but this kind of has been in 200 point range, but let's assume that. So 200 point range, if the market has already done coming up and it's like 180 points, let's say, already, let's say that's 180 points, that looks like a 5, but it's really an 8. Let's do it properly, 180 points, let's say it's already done that, then that's an indication that maybe this won't go ripping through because you've already done the expected, inverted commas, range of the day. The range of the day is expected to be 200 points approximately. If it's already done 180, it's not got that much more to the high side. It might start kind of running out of puff, or let's say 180 to, let's say, 240, somewhere in between there. you're probably going to go, well, that probably not something that's going to rip through massively unless it's a real unusual day, because we're likely to stick in this kind of range. And of course there are exceptions, and they're kind of big massive trend days, etc. And I'm not going to go into some details now, but there's ways that we can try to identify that. But that's another tool we've got for intraday traders. We can go, well, yeah, you know, we've not seen this kind of much more than a 200-point move in the last 5 days. Things aren't that much different today. We've been messing around and now we're at highs. Well, that's another clue that potentially we're going to reverse as opposed to rip straight through. And now add that to your time of day. Let's say that was at lunchtime. You're ripping through, you've already done a 200-point range, the ATR's 200 points. Well, now the evidence is building up to suggest that actually that's a good fade opportunity. It's definitely not something to rip through. And vice versa, we could say, well, actually, look, we've only done 50 points so far. The range is 200 points. We're at the open here. We've got a good strong gap up. Then this would more than likely, we'd say we normally do in a first hour's range, you know, 80 points, for example. This would perhaps indicate that, hey, that doesn't need to be faded. That needs to be kind of traded as a breakout, or at least not faded, because we're at the beginning of the day, which is a check mark for some kind of range expansion. We normally get 80 points within the first hour, just for argument's sake, and we've only done 50. So then, you know, it looks like we could be getting breakouts. So the beauty of intraday trading, guys, and a great question from Sean here, is that, you know, we can start to take other bits of data that we know about the market conditions and what we're trading, and use those as a tool to help guide us with our setups. So like Sean's saying, do I take a breakout? Do I take a fade trade? Well, there's setups within that, and I'm sure he's got his risk reward ratios sorted out, and his stops and his triggers, etc. But when to actually take the trade, you can add these extra things in to give you more reason to take it or less reason to take it, as the case may be. So I hope that's helped. I quite like this kind of stuff. This is kind of thinking about how to really optimize those sweet spots from an intraday basis. And, you know, when you start to add these things together, you know, it can be very, 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 very useful indeed. All right, thanks for your question, Sean, and I appreciate all your questions and support, guys. And don't forget, if you aren't subscribed and you're watching the videos, then make sure you are hitting that subscribe button, and it is appreciated that you do that. Okay, and a thumbs up as well. Thank you. Take care. Bye-bye.